Good morning, good afternoon, good evening, traders. I hope you guys had an exciting trading day. This video is for educational purposes only. Any advice here is not to buy or sell any market, but to apply it educationally by yourself. Now, the link for the ebooks, the mentorship ebook, and the major round number trading Bible, entry Bible, with the rules of trading 3 days of breakout, 3 days of longs and shorts, 3-day setups, first red day, first green day is in the link in description. Also, that comes with the screener. Now, for traders who have seen me trade live together, you see that there is no fugazi or there is no pretending with the entries. The entries we take are because we follow our rules, and when we follow these rules we tend to make money, and when we stick to the process we close off and come back the next day. Now today we are going to talk about US30. Now US30 gave 3 days of breakouts, which evolves to a first ready. Now in the ebook I have stated clearly that before you trade a signal day you should understand 3 days of breakouts, 3-day setups, 3-day setups, 3 days of breakouts. Your higher closes and lower closes, they move together. Now the market may not give you what you want to see, but when you understand certain rules in the market, you can align yourself with higher time frame traders in the direction of the initial movement. Now we have here a brief explanation of why I sold the US30 and why other traders should also do same. Now if you are scared, follow the rules. If you are excited, you wait. When you see a pattern and you get excited, wait. Do not jump into that market. You wait and calm down first, process your thoughts, and be sure of what you want to do. Okay, if you are scared, go back and open the ebooks, read the rules, and then apply it. We saw traders today trade live and apply rules, and whenever you apply rules you make money, and whenever you know how to place your stop losses you make money too. Now today we had US30 on the 5-minute. Yesterday talk about the 5-minute universal entry criteria. No one follows that rule, no one follows it, but they want to make money. Now we had our Asian session. Like I said, technically 3-day setups, 3 days of breakouts will evolve to a short-term bear trend. Now there are rules that guides trading in a bear trend. Now we have our moving averages, we have setups for the moving averages gap bar, moving averages gap 2 bar, which I learned from Al Brooks. Magnet moving averages can act as magnet. Previous days high and low are magnet. The closing price, the open of the week, the close of a week are all price magnets. Previous month's high, previous month's low are all magnets in the market. Now the entry point, my entry point, if you look at that chart, the sell entry. Now you notice Brooks talks about if the market has stayed underneath the EMA with more than 5 or 10 bars, that is 5 or 10 bear bars, the market is ready to explode. Okay, but then when we are trading the 3-day setups and 3 days of breakout traders in the market, also the first red day, there are rules that applies to the market. Now this market evolved to a first red day, and our rules for the first red day is we want to sell the pullbacks. Okay, we want to sell the high of session. I want to make sure that we are underneath the moving average. The 5-minute entry criteria here was met in our London session at 255 engulfment. Now Brooks will say sell below bear bars closing near their lows. We have multiple bear bars closing near their lows, but we count first. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have more than 10 bars underneath the EMA before a pullback and then a low hanging fruit in the US session. Bear bars closing near their lows. We loaded the boat and held through. The market broke through our H4. The H4 rules, so if you have ebook, you read the H4 rules. We broke through it, we pulled back, and then we gave out an EMA gap 2 bar setup for a sell continuation back inside. I was able to scalp an entry again with placing sell limit orders above the moving averages. They picked my position up and then dump, and I closed that market very fast. Now that market still pulled back. You know how volatile US30 is. It's not about trading a setup. It's about understanding when that market is ready to move and the volatility that comes with the market. I understand that US30 is very volatile, so I tend to treat US30. If I should trade an index market, if I should trade gold, if I should trade oil, I tend to trade it with care. Most traders think I don't trade indexes. Yes, I trade them, but I trade them when it is right to trade them. I don't trade them when I don't have a setup. I want to trade the first red day on indexes. I want to trade 3 days of breakout on indexes. I want to trade 3-day setups on indexes. Okay, I want to trade an inside day. I need a signal that gives me confidence to follow my rules. And we saw that today live. Those of you who joined me to trade live today, we saw that today. It was a very good one. Congratulations to all of you. Now we take a look at other trades. The NZD-JPY, where we went short here while we were live in the London session. We went short here. Okay, the market pulled back. I requested that we add more positions. We added more positions. The market pulled back again. Congratulations to those that saw this pullback, and then we added, and then we closed off that market after behaviors, signs of a pullback. That market pulled back now again to a level where I have always talked about. It pulled back to the closing price. It pulled back to our 1 hour moving average, and then we failed that level again. We are back inside. Like I said, when you think the selling opportunities are over, when you close off and you leave your screen, the market tends to give a good sell setup. Now, Al Brooks talks about every bar on the chart is a good setup bar. Every bar on a chart can be the beginning of a good move, okay? But we need to apply that with wisdom. Yes, we know that every bar on a chart can be a beginning of good moves, but we need to be careful when to apply them. We need to be underneath the moving average or above the moving average. So if I want to buy, I'll buy here. Buy above bull bars closing near the highs. Okay, we are buying above bull bars closing near the highs after a W pattern at the bottom. Okay, if I want to buy, okay, I want to stay on the side of the EMA. But when it fails, okay, when we start applying back our that's a scalp there, those who scalp the market. But for me, I don't scalp the market. I want to trade the explosion, the failure at the first leg, the M pattern that gave a sell high setup of the first red day on the NZD-JPY, which collapsed down to the US session, and then before the final hours, the market pulled back. Okay, markets will always pull back, but pullbacks last specific number of bars on higher time frames. Okay, now we look at the trade I took again on the took a trade on Aussie USD. Now the market failed. Okay, whenever the market failed to give us lower lows, or rather give us higher highs, we bought this market, buying above bull bars closing near their highs. The confirmation was very clear. Okay, we started buying above bull bars closing near their highs. Okay, our take profit level is the previous day's high. That was clear. For those of you who remember, who were in the live and remember the take profit level, you can comment below. I was there live to see this opportunity. Congratulations. Now we also bought the AUD card. Also, we talked about medium price 50s and 25. It's been long. We spoke about this. Medium price, major round numbers. Stacy no longer talks about it, but I will still talk about it because it still plays a vital role in our trading. Now we bought again and we held. I've currently closed this trade. Strong opinions, strongly held. Strong opinions, weakly held, are for traders who are weak and don't follow their rules. Now we had a measured move up. Now congratulations. Now GBP Swiss franc, we're looking to buy, but the market gave a railroad track pattern, which I told traders that is an M pattern, a bull a bear bull bear, a bear bull bear pattern, okay, and then a sell below bear bars closing near their highs. After that, we had an entry, a break of structure on the inside, okay, and then whenever a market breaks a level, they will pull back. So they pull back again to the EMA before giving us most sell-off entries. I took this market again. I don't know why. I advised traders to sell this also before we closed our live session, and boom, it has given us a measured move down. But the markets go with you guys. It's very simple. Buy above bear bars closing near their highs. Whenever you see on the 5 minute you have bear bars more than 5 or 10, okay, outside of the EMA, this is an Brooks pattern. 1 2 3 4 5 6 7 8 9 10. The reversal is strong. Wait for pullbacks to the EMA to buy, okay. Once you have more than 10 bars on above coming out of a reversal, once you have more than 5 together, more than 10, you look to buy. Once you have the same in the opposite direction, you look to sell. But the markets go with you 1% better every single day. This then evolved to a 3-session setup. Congratulations to those who took it. Congratulations to myself. Every trade we took today was a winner. But the markets go with you. If you are a newbie and you would like to learn about 3-day setups comprehensively, 3 days of breakouts, first red day, first green day, and the rules that govern them, the link is in the description. Join us. Trade life, learn life. Be like Alex, be like Christopher, be like Chris, be like George, be like Brian, be like Devil, be like Waiki, be like many others in the community. I can't mention names, but there are so many good traders here with us. We learn from ourselves, we learn together, we trade together. If I don't know, they show me, I follow them. If I know, they follow me. But the markets go with you 1% better every single day. Remember, there are rules that govern trading in the market. We think we know all, but when our master tells us to go look at this book, look at that book, please do well to go look at those books. They will help you and give you more confidence in the market. Buy above bull bars closing near their highs, must be totally above the moving average. Sell below bear bars closing near their lows, must be totally underneath the moving average. If it pulls back, it needs to be a rejection and a failure back below that moving average. When the markets go with you, look for setups. 3-day setups are of 3 types. 3-day setup inside day template, 3-day setups direct template, 3-day setups day 0 template. There 50% of the time will close in breakouts. 3 days of breakout traders in the market are of 3 types, the same as I've just mentioned with the 3-day setups. 3 days of breakout traders inside day templates, day 0 templates, and direct templates. No day 0, no inside day. 3 days of breakout. 50% of the time will close in breakout, 50% of the time will reverse on the day. If they close in breakout, it's a setup to reverse the next day. But the markets go with you 1% better every single day. See you guys in the next one. Thank you.